Hey everyone, this is Optimum FX. Today I'll be providing a weekly analysis across our major currency pairs and commodities. It's currently the 25th of April today, and I'll be mapping out key areas and key levels that I'll be looking at throughout this week, and talking about what fundamental confirms and what fundamental data we have coming out this week, which can help give us a stronger bias. Okay, so firstly, I just want to talk about what macro data is coming out this week. So firstly, we're going to go to the US. Okay, so throughout this week, because what I like to do, I like to understand and know what macro data is coming out. So when I'm trading certain pairs, I'm aware of any high volatility throughout the market at that time. So firstly, it's the last week of the month. So we do have, in some economies, we do have a lot more data coming out and a lot less. So firstly, we're just going to look at the US. So we do have durable goods order, which is very impactful. We do have business index and red box index data coming out. We do have the Case-Shiller home price index, which is honestly, it's just a house price index, and it is the annual report. But with the Shiller home price index, it is a lagging report, and it pretty much just averages out the price of homes throughout the whole United States. But yeah, this is an annual report, and with all the reports, they do lag by two months. So it is a lagging economic indicator. But moving on, we do have consumer confidence coming out on Wednesday. Weekly crude oil stock, if anyone here trades oil, OPEC meeting, mortgage applications, very impactful, along with trade balance. It says here it's not impactful, but it's impactful, don't worry. So we do have crude oil stocks change. We do have the Fed interest rate decision coming out. So yeah, there's going to be a bit of whipsaws. We might see a lot of manipulation, and we are going to see a lot of markets being priced in. Moving on, we do have personal consumption expenditure, which is a key thing that the Fed looks at when calculating inflation. Like everyone says, CPI data is the main indication, but the Fed, they primarily use the personal consumption expenditure, right? Because it's, yeah. And then we also have initial jobless claims and annualized GDP data, okay, for Q1. We do also have pending home sales, natural gas storage, and yeah, we do have annual personal consumption expenditure data coming out. Yeah, so plenty of data coming out. As we can see, we do have the Michigan Consumer Sentiment Index coming out on Friday, along with the Baker Hughes oil rig count. So yeah, there is plenty of data, and I guarantee there'll be a lot of Fed members speaking throughout the week. So that's one thing I'm going to look out for. I guarantee you, it will be safe to trade the US dollar, but especially come around Thursday, prior to the release of the data, there will be whipsaws, and obviously it's going to be priced in. Okay, so as we can see with the UK, there's not much data we have coming out this week. We do have shop price index and national housing prices, annually and monthly reports. So not much going on there. Throughout Europe this week, we do have a lot of ECB members speaking throughout the week. We do have money supply, private loans data coming out, along with consumer confidence, which is very, very impactful. We do have the economic sentiment indicator as well, along with annual CPI data coming out, with quarterly GDP data, and unemployment rate. So there's going to be plenty of whips, there's going to be plenty of volatility come Friday to close off the week. So let's move on to Japan. We do have plenty of data coming out. So 2 days before the Federal Reserve interest rate decision, we do have Japan coming out with their interest rate, which is going to be very impactful. We We do have retail trade data coming out on Wednesday, and to end the week, we do have CPI and unemployment data, and we also have housing starts, consumer confidence data, and construction orders. So yeah, very impactful data coming out from Japan this week, and in Australia we do have CPI data coming out, along with import and export price index and producer price index. So yeah, there's plenty of data coming out. So yeah, to end the month, we do have plenty of data coming out. So now I'm going to point towards the charts. Okay, so we're going to cover. I'm going to cover a few pairs, commodities, and going to have a look at the currency indexes. Okay, so firstly, we're going to look at the Australian dollar against the US. I like to trade risk currencies versus safe havens because to me, it's a lot more clearer. It's a lot easier to understand because from what I've seen and what I've absorbed in the market, you'll see 9 out of 10 times that a risk currency against a safe haven currency, like for instance, Aussie and the Euro, they will move similar, right? The Aussie dollar against the US dollar and the Euro against the dollar, they will move very similar. Why? Because it's a risk currency versus a safe haven. Same with, if you look at the Aussie and the US dollar chart and you pull up, the Aussie and the yen chart, there is plenty of similarities here. Wouldn't to say, I mean, it's never going to be identical, but yeah, if we look at Aussie Swiss and Aussie yen, it's very similar. AU is a bit, messy because the US dollar has been very indecisive due to macroeconomic reasons. But okay, so let's just focus on technical analysis. Okay, so as we can see here, the Australian dollar was trading in this little range here for about 3 weeks, right? So about 3 weeks out of the month. So the Australian dollar was trading in this little range. It was very indecisive. I did map out just by when we started having the strong bullish run with the vaccine rollout, because that's the main reason why our risk assets have been appreciating a lot more than our safe havens, just because of vaccine rollout. A lot of economies opening up, which means unemployment data is getting lower, higher forecast for GDP, and higher expectations for annual inflation, right? So that being said, yeah, I'm still bullish on all of our risk currencies. But okay, let's just focus on the Australian dollar here, okay? So with the Australian dollar, after we did break out of this range, it was a very impulsive move, but more than likely we were gonna, play around in this little range here, unless we get some fundamental catalysts in the US, or if we get some kind of fear or uncertainty. I can see the Australian dollar dip below this level here. We could just see, a little, like we could just play in this range here, because as we can see, these highs are actually getting lower, right? These highs are really, really just getting lower, okay? It's a horrible trend line, but yeah, these highs are definitely getting lower. So we can draw out, just a little channel here. So yeah, they are getting lower. They are getting lower, which shows, a bit of, exhaustion or buying pressure on the Australian dollar. So what I'm looking for this week, I'm still looking for strong buys. I'm still looking for longs on the Australian dollar. So ideally what I'm looking for is if we can kind of, I am respecting this lower time frame bearish structure because we failed to break above here. And then with this final 4 hour candle here, because we are on the 4 hour time frame, I like to do my analysis on the 4 hour because it tells me a lot more, shows me a lot of momentum and where the market's going, or it's really just telling me what the sentiment, like the market sentiment is. So moving forward, we can see these highs are definitely getting lower, okay, as we speak. I like to see is if we can just play around this range. I would like your high risk buys is if we come back here and if we just wick or create a nice candle body support at these lows here, this low and this low here. So if we can get a nice candle body support here on the 4 hour, or we could just get like a strong wick to the downside, and then it just gets quickly bought up with a lot more buyers in control, I can see continued buys up. So ideally I would like to see like a little candle body support in this range here, this range, and I could continue the buys up. But I would need to see, you know, like I said, strong candle body supports, and then we could continue buying pressure to the next high, right? And then if we can definitely retest here and don't break below, definitely see continued buys to this level here. And then as we can see, like this is a previous this is a strong zone, especially this area here at 78.3. So yeah, if we see a lot more weakness in the US dollar and a lot more positive macro data in the Australian economy, so if we get good CPI data coming out, which shows, you know, growth in the economy. Yes, you know, with CPI, like over time it does devalue the currency, but it's showing growth, right? It's showing expansions in the economy. Okay, so if we do get positive data throughout the week, I can definitely see, you know, especially early on in the week, and then especially with this coming out as well. And then if we do see the Feds, you know, retain the current interest rate at, like, I think it's 0.1% right now, I can definitely see continued longs in the Australian dollar. We might see a bit of, like, you might see a bit of I don't want to say it, but a bit of manipulation. You might see something a bit priced in where a lot of our risk currencies dip down before the interest rate gets released, and then quickly gets bought up, right? Because with the interest rates remaining low, that is bad for the US dollar. Okay, because like you got to understand that when the interest rates are low in economies, hold on a sec. So when interest rates are low in economies, that shows like fear. So like the thing is with you, like the whales, the big investors, they will not buy Forex reserves in a country with low interest rates. They will put it in a country with higher interest rates. Okay, so if US dollar is still dovish with the economy and not thinking about hiking interest rates anytime soon, I can definitely see continued buying pressure with our risk currencies. Okay, so with that being said, like I said, your high risk buys at 77 flat, and then if we can continue buying pressure, I like to get like a nice counter body support. Yeah, I really like to get a nice counter body support at 77,350. That is a key area I'm looking at. All right, so now let's go to the euro. As we know, like, Euro has been lagging a lot compared to our other risk assets, you know, especially comparing it to the pound. Okay, so we'll go to the pound afterwards. So let's just go with Euro. So with Euro retaining their interest rates and showing, you know, like a bit more strength in the European economy. Yes, there's still lockdowns and restrictions, but overall the economy is rebounding, and there's not so much fear as there was, you know, like late last year before the vaccines got rolled out. So with the European economy, I can still see continued buying pressure, because if we were going to dip below these lows at 1.16, I could definitely see continued selling pressure. Yeah, I could definitely see continued selling pressure. Or what I was looking for, if we did dip below, was potentially higher risk buys at this more favorable demand zone. Unfortunately, we didn't reach that. Hell, we didn't even go back to this nice little demand zone. So anyway, so right now we've just been on a strong bullish run with optimism from the European Central Bank. Okay, so that being said, I can see continued buys. we might play around in this little range here from 1.20, so let's just say 1.20 600 to 21,650. Okay, so we might play in that little range there for a bit. But however, if we can respect this trend line, I can see continued buying pressure. So in regards to entries, and in regards to what macroeconomic data we do have coming out this week, we do have plenty of the members speaking out early in the week, and on Thursday and Fridays when all the good, when all the juicy data comes out. So that being said, I would really like to see if we can get like a nice candle body support. This is like a medium risk buy in my opinion. If we can get a medium risk buy at 2600, I can see, I can definitely see like medium risk buys, but I would need to see like a strong candle body support on our higher time frames, especially on the 1 hour. Okay, and I would need to see weakness or like a dovish sentiment from the Federal Reserve. Okay, I would just need to see that. That would just give me the fundamental confirms, right? And then with the retest here, that's giving me the technical confirms. So yeah, I would like to get a retest at this level here, medium risk, or we even may dip below here, which is now a previous demand zone, or we might just potentially we could just play this little range and be very indecisive until the Federal Reserve comes out with the interest rates. That is a possibility. So what I'm saying is we could break below here and we could just play around this little range. We could generate liquidity, see price get be pushed to a better demand zone, possibly here, and we could break through this zone and we could just rip. Okay, that is that is a strong possibility. But yeah, I would say your high risk buys will be at this level here at 1.1 at 19900. And if we do, because this is a very strong supply zone, so judging by what happened here previously, we did get stuck in this range, we did pull up a bit, and then we just retraced, and then we started trading down in the zone. So what I'd like to see, so if we do rip, we could reach this high here and we could go back to this high, but that is a longer term thing. I don't really see the euro going up. What's it now? For 200 or so pips. It is a possibility, but I would need a lot of strong macro data from the European Union and a lot of weakness in the US economy. Okay. So with that being said, let's move on to the pound. The pound's kind of the same thing. So the pound has been on this strong bullish run after the vaccination rollout. This is our yearly high. The price hadn't been this high in I believe 2 to 4 years. So yeah, that was that's just plenty of optimism. And then obviously before that, we had Boris Johnson announcing the COVID. I forgot what it was called, but I think it was just reopening the UK economy each week, with how well the vaccinations are rolling out and the decrease in deaths and cases in COVID. It was just going to start opening up the economy a lot more, so opening up more shops, opening up a lot more restaurants, more schools, allowing for more public transport, which provides a lot more growth in the UK economy, because it shows that a lot of money is being fueled, and he's allowing all these things to be opened up, right? So the economy doesn't contract in the first quarter of 21. Okay. So all right, so let's talk about it on a technical standpoint. So we don't have much news coming out this week, the pound, so we don't really have much. A lot of data came out last week, sorry. So yeah, a lot of data came out last week. So with that being said, we did have a strong impulsive move on Tuesday, and after that we are starting to correct this move here. Okay. So after correcting this move, we could trade in this little range here. If we do break below this little range, I could probably see, to be honest, I don't really want to sell the pound. just because of how impulsive just because how impulsive the buying pressure is. Because you got to understand, we had this strong impulsive run here, look, and then we've slowly just come down, consolidated, break below, consolidated, now we're coming above. But if we can retest at this little range here, I see US dollar weakness, and I'm matching up with this previous supply. Well, I'm matching with this now because this is, to me, this is just a decent supply zone because of how we've reacted at these levels, and especially considering we jumped up here, we jumped up here, created a new high, and we decided to break below and trade in this little range a bit before coming down the levels. Okay, so that being said, I won't be surprised if we do play around this little range and continue up. But yeah, so in order for that, I would need to see a lot of optimism in the UK economy. We don't have much macro data coming out. But if we do see optimism, from Boris Johnson or any Bank of England member speaking, I can see continued longs, and I'm more happy to take longs than shorts on the pound just because of how impulsive it is. Like if I'm, if you are planning to do any shorts on the sterling, don't expect any crazy impulsive moves. Like, it's just gonna be very slow and steady. It's just a correction move, right? There's a reason why there's impulsive moves and correction moves. So we might play this lower range here, trade some liquidity, and we might continue back up and play in this range here, continue back up. Like, ideally that would be optimal, but if we can retest the zone here, because this is a strong zone, right? So we did reject the zone here, but if we do come up again, I can see continued buying pressure. Okay, buying pressure to the next zone. Ideally, like, that'll be ideal. The market doesn't always do that, but yeah, that is what I'm looking for on GU, continue buys, and I would like to see if we can still respect this higher time frame trend line. Okay, so yeah, as in for your buys, honestly, if we can, I don't think we'll actually come, like, there is a possibility we can come back to this zone, because we've got to bear in mind that, with data such as the interest rate decision coming out, like, it will be priced in. Like, price can be pushed down to a better demand zone, and by demand zone, just looking at the chart right now, to me, this is a strong demand zone, and it matches up with our high time frame trend line. Okay, so high risk buy if we do come down to like 138 psychological level. Okay, be a high risk buy, and then if we can retest here, there'll be a medium risk buys, and your safe buys will be at 140 flat. They are your safest buys. Okay, so with GJ is pretty much similar. We have actually broken below and actually retested our higher time frame trend line. Okay, so after reaching these highs, there was no real fundamental reasoning as to why, or macroeconomic reasoning as to why the pound was depreciating. My only assumption is that a lot of whales or big investors were cashing out of their longs, and they were being relieved out of the market for holding their position for X amount of days, weeks, months, whatever. Okay, so they've cashed out on their highs, and like, to me, until we, like, if we break below 148.7, 750, I can see continued selling pressure to probably, yeah, I can see continued selling pressure to 147.950. Okay, and that's like a 70 pip range. It's a 70 pip range, and then if we do come below here, like, I'm honestly still going to be bullish on this pair, right? But I can just see prices being pushed to a better demand zone. Okay, and we do have to remember, we do have the Bank of Japan announcing the interest rate. Okay, this week. So that being said, I can see, like, a high risk buy is if we come to 148, 750. If we can break above this trend line here and come above this little key level here at 150 psychological price level, I can see continued buys up. if we can get a retest at 150, at 152, these are psychological price levels, to be quite honest. But if we get a retest at this level, a candle body retest, I can see continued buying pressure. Okay. With gold, so gold. All right, so let's move to gold. Okay, so after being in a strong bearish corrective structure from these highs here, oh wait, not those highs there, sorry. Let me zoom out a bit more. So from these highs here at 2070, we have been on this strong bearish corrective structure. We have failed to break new highs from, I believe, yeah, it was from August. So yeah, we've just been on the strong bearish corrective structure, but we have failed to break our now, our now demand zone or support zone, whatever you want to call it, the higher time frame, which is at 1680. We have failed to break that, and after coming above the zone and retesting the zone here, we have well broken above here. Okay, we have broken out of this messy range here, and now we are just doing this slow run to the highs. Okay, for instance, we got a low here, high here, low here, high here, low here, and we are respecting this higher time frame channel. Okay, so that being said, what I'm looking for, I would like to see if we can kind of get a retest at 1767. That's what I'm looking for. If we can get like a weekly lower wick with this area here, I can see continued buying pressure, but he's going to be very careful. And then, of course, if we look at the candles, we can see there's a lot more impulsive moves with our bullish candles. Okay, we got the strong impulse here, a little consolidation, impulse here, consolidation, consolidation, impulse, consolidation, impulse, consolidation, retracing, impulsive, but we do have a strong impulsive bearish candle, right? And this is a bit of an indecision count at the moment, but what I like to see, if we can come back down to this zone here and generate a nice candle body support, do not break below this level here. Do not do anything like this, because then, oh well, my computer just froze. Yeah, we could see something like that. That was a horrible line, I do know that. I'd like to see if we're gonna get like a nice, if we get a nice wick down on the first 4 hour of the week. I can definitely see continue, and then there is a possibility, it would be a very high risk buy. I can see continued buying pressure, right? Buying pressure to the zone, and then if we retest the zone, I can see us carry out to the next level, okay? 17 to 1800. But if we do break above 1800, I guarantee you that'll be a lot of buy side liquidity, just because we haven't been at those highs ever since February. So it's been a solid 2 months since we've been at those highs. So that being said, that would be a key level to look out for. If we got to 1812, then yeah, it's just following these key levels here. Okay, so just gonna be very cautious. But like I said, my high risk buys will be at 1767, because that is a very key level. Okay. And then if we can retest our safer buys, if we can break and retest here at 1790 and maintain a lot more buying pressure, I can definitely see continued bias. All right, so now we're gonna go into US dollar index. Okay, so US dollar index has been on the strong bearish run after reaching these highs early last year. From COVID, because we do got to understand that. So I've got the US dollar and the yen. We both got to understand that both these currencies do operate the same way. Why? Because they're safe haven assets. Okay. So with our safe haven assets, they have been depreciating due to all the optimism in most major economies. Okay. Yes, there's still fear and uncertainty. Plenty of economies. Such as our emerging markets, they are struggling due to they don't have the medical facilities to be able to handle, excessive amounts of COVID cases, especially in India at the moment. I believe they had like 200,000 cases the other day, which is terrible for the economy, because it's pretty much showing that, the COVID virus isn't under control over there and it's way out of their reach. Okay, so that being said, of course, there's a bit of fear, but to me, we did have the $1.9 trillion stimulus bill. Obviously that was priced in, like we did rally to these highs, and after it was actually issued, like we did retrace. And when we did break below this little demand zone here, so let me zoom in a bit. Yeah, when we did break this little demand zone here, we can see that it was a flush move. Okay, it was just a flush move to the downside. And now what we're doing is, now this demand, like this previous demand zone, is now acting like a supply zone. Okay, so if we can remain below 91,400, I can see continued selling pressure off our safe haven assets, and I can see a lot more buy side liquidity with our risk assets. So again, GU, EU, AU, any of those economies, right? So yeah, I can see a lot more buy side liquidity and a lot more optimism. Okay, for you technical analysis guys out there, you can. Oh, let me come back to this. There is a high time frame M pattern. So I do want to see how we react at this level here. Like we didn't come to this level this week, fortunately, but I do want to see how we react. We might get an aggressive bounce back, retest here, and come down. And then what's that going to tell me? It's going to tell me a lot more sell side against our safe haven assets. And as we can see, ever since this year, we can definitely see the yen just depreciating, literally just falling off a cliff. We do have a bit of optimism ever since the end of last month, due to the Bank of Japan possibly increasing their interest rates in the near future, right? So that was the main optimism, or the main catalyst as to why the yen has been appreciating. That shows a lot more growth and a lot more optimism in the Japanese economy, and it shows what else does it show? It shows a lot more positivity from foreign investors to invest into Japanese investments or Japanese reserves. Okay. So yeah, with that being said, these are my trade ideas. This is what I'm looking at on a macro and technical standpoint. So we do understand what we're looking for on our risk assets: the Aussie dollar, EU, the sterling, GJ, gold. So yeah, like we know what we're looking for. So yeah, and it's up to ourselves this week to be emotionally neutral, to think more in probabilities rather than emotions. Think a lot more logical when you are placing your trades. And yeah, man. Just want to say, hope everyone here has a great trading week. Anyways, I'll talk to you next time. Thanks.